may hit some of the economic injury disaster loan too as well, but just how this applies to everybody. So with that, I'm going to turn this over to Faith right now.
Hi, everybody. I just wanted to give you a quick intro about who I am, and then I'm going to let Joseph introduce himself, although he hardly needs an introduction. I am a corporate attorney, and I've been working with small businesses a lot for the last 7 years, smaller businesses. Before that, I worked at Skadden Arps doing, billion-dollar deals for international M&A deals in Los Angeles, Hong Kong, and New York. And now I've switched over and work helping a lot more small businesses to get the corporate and business legal help that they need. So I am very lucky to know both Dave Dillon, who is a phenomenal entrepreneur, and Joseph Amato, who is the SBA, who's the district director for the SBA for the Western region of Nevada. And he has very graciously, I'm going to stop sharing so we can see him when he comes on to talk. He has very graciously agreed to give this presentation. We are going to talk about the Payroll Protection Program and the Economic Injury Disaster Loan, EIDL. So we call them PPP and EIDL for short. And there's so much misinformation out there, and people have so many questions about these programs because they are very new. So we are incredibly grateful to have Joseph Amato be able to come on and give us clear direction and instruction about these programs and give us the real deal. So without further ado, I want to introduce Joseph. Take it away.
Thank you very much, Faith. Good afternoon, everyone, and hopefully this can be informative and helpful in you making some decisions about whether or not these programs work for you. Faith, do you want to go right into the slides? We can get started.
Yeah. Do you want to talk a little bit about yourself at all, your background?
Well, I'm the SBA District Director for the state of Nevada, not just the Western region, and I assist the regional administrator with the Western region. But titles aren't important to me. As I told someone very, very important to me, I'm sort of the janitor of the SBA right now, cleaning up everybody's messes. So hopefully the information I can supply today will be helpful to you. I promise there will be no editorializing. I'm just going to give you the straight facts, and Faith knows what that means. So.
Okay, well, let's get going. We're going to start with talking about the Payroll Protection Program. Then we're going to move into EIDL. Then we are going to talk about how those compare. So how those two different types of loans compare with each other, which will allow you to think about which loan you want to apply for, or if you want to apply for both, and how to do that.
Okay, well, the Payroll Protection Program was enacted by Congress two Fridays ago and signed by the president. It's basically was positioned to create an opportunity for small businesses to maintain their employees, whether they were active employees because the business was still partially open, or whether they were going to bring back employees off of unemployment because they were shut down for whatever reason, whether it was a mandate by the state, by the governor, or whether it was because where they are in the supply chain, their business fell off above their heads. So basically they shut down for the time period that's like in Las Vegas, that the resorts were shut down. It is a zero fee, and I'm going to call it a funding as opposed to a loan program, because the whole idea of the Paycheck Protection Program is that at the end of the day, it shouldn't be a loan. It should be fully forgiven funding, and we'll get into that really quickly. But it's zero fee. You should not pay any fee to anyone to help you get involved in this program. It is a program administered by the lending community, although the SBA, the Department of Treasury, and everybody are involved in it. It is administered by your lender, by your national lenders, your regional lenders, your local lenders, your community bank lenders, your credit unions. They're all involved. They've all been deputized to basically administer this program. If you do end up with a loan, which is hopefully a remote possibility, it's a zero interest-based loan for 24 months. And the program itself can allot up to $10 million per company. And since we're talking to a hospitality group, luckily, the normal applicant is only allowed one application. In the PPP program for the hospitality industry, you're allowed an application for each one of your locations, as long as each one of your locations is less than 500 employees. Go back, because I want to see you're moving forward. Go back to the first one, Faith. How it works basically is they're going to provide you funding for up to 8 weeks of what your average monthly payroll is, and we'll get into details with this. And if you maintain your negotiated employee amount the day you close the loan to 8 weeks later, the loan is 100% forgivable. While the PPP funding is in place, there's no principal interest payments due for the first 6 months if you end up with a loan at all. Most likely within 3 months, you're going to have a fully forgiven funding, and we'll get into that in more detail. Next slide, please. All right, it's the PPP program is 100% federally guaranteed, so the lenders have no risk or liability. That's more for the lender than it is for you as the borrower. It's 100% guaranteed loan. It allows up to 8 weeks of payroll to be forgiven along with rent, mortgage interest payments, and we'll get into how the dynamics of that works. But 75% of your total loan has to go toward payroll. 25% of your total loan could go to other operating expenses that are acceptable. Payroll costs include salaries, wages, commissions, bonuses, health insurance, retirement contributions, local, state, and federal taxes. If your basis is 2019, we'll get into that in more detail as well. If your basis is in 2020, then your federal taxes have to be excluded because you most likely haven't paid them yet. But for all intents and purposes, it's an all-in payroll number. And it excludes, if you have any 1099 contractors, they're not employees, you have to exclude them. But anyone you pay W-2 salary or wages to can be included in the payroll cost. Next slide, please. Who's eligible? The most important thing is any small business that is under 500 employees is the key. Everything else, basically, if you're a franchise operation, a veterans organization, an independent contractor, sole proprietor, you're all eligible, or a tribal concern, you're all eligible as well. And also PPP is eligible for nonprofits, which we're not talking about at this point, since I understand I'm talking mostly to the hospitality industry. So basically, as long as you're an entity under 500 employees. Here's the exception for hospitality. Normally, you can only apply for one at a time for each business where an owner owns 20% or greater. In the hospitality industry, if you are a hotel owner or hotelier where you have multiple holdings and multiple properties, you're allowed to file for each one of them independently as long as it's under 500 employees. And this is true for both PPP and EIDL. EIDL program being the Economic Injury Disaster Loan Program. Who's eligible? Anything having to do with cannabis. Obviously, in the state of Nevada, that's important. Any household employer that's not considered a business. If you previously defaulted on a federal loan in the last 7 years, you'd be ineligible. And any business operation whose gaming revenue exceeds 33%. And there are some hotels that you may have a gaming contingency or a gaming component, let's put it that way, and say I've just talked to a hotel operation here in Nevada, 29% of their income comes from gaming. The rest of their hotel operation is food and lodging and so on and so forth. So they're eligible even though they have some gaming, they have some slot machines on the property. Because it's less than 33%, they're eligible. Next slide. You can use your PPP for, as I said, 75% of the total loan can be attributed to payroll costs, and the other allowable costs are payment of interest on any mortgage obligations. You cannot pay principal, just interest payments, rents under a lease agreement, utilities, and interest covering other debt that were incurred before the covered period, which is 2/15/20. Next slide. Determining payroll. Again, we're talking about salaries, wages, commissions, or similar compensation, not 1099 compensation to contractors. Payment of tips or equivalent, which you may have if you have restaurants, operations that you own inside your hotel. Payment of vacation, parental, family, and medical leave, all included. If you had an allowance in your base year for dismissal or separation of employees, that can also be included. Payments required to cover group health insurance benefits, including the premiums themselves, any retirement benefit, and state and local taxes, but including if you're using 2019 as your base year, you can also include federal taxes as well. Next slide.
I say one question about the insurance premiums, which has come up, which is if an employer and an employee are both paying into the insurance premium, the amount of the insurance premium that you can put under this payroll is that only the amount that the employer is paying and you don't count the employee's contribution?
No, you count the employee's contribution. But what this is alluding to is if, say, on top of your payroll, say your payroll's $100,000 a month, on top of your payroll number, you can use, and say you have a separate $5,000 a month group health insurance premium that you pay, you can take that $100,000, add the $5,000 and put it into your equation for your payroll calculation. So it's what you pay as far as premiums concerned. Everything else.
So that includes what the employee is contributing to that?
Yeah, because that's part of your regular gross payroll. Yes.
Okay.
Okay, the exclusion for payroll is any individuals. So say you have 25 individuals and nobody makes over 100,000 a year, then you're fine. If one of your employees make over 100,000 a year, say they make 125,000, you have to deduct it from the gross payroll number before you average it out. So if that person makes 125, they're actually, for the calculation purposes, are only going to document and calculate 100,000, and that would obviously lessen your actual amount of average. But the way the law was written, no one over 100,000 could be attributed to your gross payroll average.
So we're going to show you an example of that.
And yes, we will see an example. And any compensation, you have to exclude any compensation to an employee that lives outside the United States. So there is no, anyone that's not necessarily the American citizen. You could have somebody that works for you, lives outside the United States, and works for you as an American citizen, and still it can't be used in the calculation. Next slide. Well, to determine it, what we've decided and what we've recommended to most of our banks is that to look at 2019, because most of the banks want 941s to compare to the number that you put in there. So the cleanest 941s we have right now are the 4 941s for 2019, although some people have started filing their 2020 first quarter 941s. But we're using, in this case, we're using 2019 as your base 12 months, and it's the average compensation. After you subtract any employees, step 2, that make over 100,000, you move to the next slide, step 3. You take that amount of coverage. So say that amount after you make all your adjustments is 1.2 million. Your average divided by 12 is 100,000. You're going to take that $100,000 calculation for your average monthly payroll, which is step 4, and multiply it by 2.5. In this case, that 100,000 would be $250,000. That would be the PPP amount that you would request from the lender to cover your payroll over the next 8 weeks. The step 5, we'll talk about a little bit later, but if you do have an economic injury disaster loan and it's less than the 25% difference of add-on that you could put on to this loan, it may make sense for you to add it to the equation of your PPP loan, because then it'll be fully forgiven. Instead of having a loan, now you'll have forgiven debt. If it's greater than an amount, it's better to keep your EIDL loan as a separate entity completely from PPP, because it's a 30-year amortization. It's only 3.75% interest. It's a very low monthly payment. Next slide, please. So for employees making over 100,000, when we look at the annual payroll, and we have 10 employees, 6 that are paid 60,000 a year, and 1 that's paid, or 4 that are paid 120,000 a year. This is how you'd look at the calculation. So the 6 that are paid at $5,000 a month, equal to 60,000 a year, those 6 employees times 5, that portion of the PPP will be $30,000. If you have 4 employees that are paid 120, you're going to take that, and you just normally would say that's another $10,000 a month. Well, you have to deduct it, or you only can calculate for those 4 employees an amount equal to $8,333 a month, which is equal to 100,000 divided by 12. So you take those 4 employees times the max, 8,333, you add it to the employees, and that gives you a total of 33,333. You add it to your total already of $30,000 for your employees all under $100,000, and that means your claim would be 63,333, as opposed to if it was just normal and there's no governor per se on the 100,000 or less. Instead of being 70,000 a month, your actual loan request would be 63,333. You can add health insurance benefits and so on and so forth. In this case, we use the 5,000 a month. So your total loan is going to be 63,333 a month plus the 5,000 a month times 2.5 would give you a total of 158,333 plus 12.5, which would be your PPP request would be 170,833. It's a very good example.
Well, this is the payroll portion of the PPP request.
This is the payroll portion of the PPP, yes. Okay, so the forgiveness part of this really comes back to how many employees you have, okay? So they'll check on that you have, so say in last year, the hypothetical 1.2 million we used and the $250,000 PPP loan, say you had 25 employees. Or in this case, let's use the example, you had 10 employees, okay? The day you close your loan with the lender for PPP, you have to have that same amount of same amount of employees on staff. Not the identical employees, the same amount. Somebody asked me not too long ago, well, what if one of my employees, what if 2 don't want to come back off unemployment? Can I add my wife as an employee to make that count up and my son, who's 22 years old and will do some work for us? As long as the number of employees equals, for the 8 weeks, the entire 8 weeks equal the number of employees that you agreed to with the lender for what was representative of the past year, then at the end of that 8-week period, from day 1, week 1 to day 7, week 8, then the bank will petition the SBA for 100% loan forgiveness. It's pretty simple. Now, using our $250,000 figure, because it's easier for me because I have the numbers in my head, this 75% formula is very important if you're going to have other expenses. So if you take the $250,000 that I use and you divide it by 75%, that'll give you a total loan amount availability opportunity of $310,000. You take that $310,000, you minus the payroll portion, which is supposed to be 75%, at $250,000, that gives you a $60,000 window of additional funding you could ask the lender for to take care of interest on mortgage, rent, utilities, other operating expenses. So as long as your 75% payroll never goes below 75%, and as long as your other doesn't exceed 25%, you can have the whole loan, the $310,000 in our hypothetical example, you have the whole $310,000 forgiven. Next slide.
Faith, a quick question on that. You can also go up in payroll as well, right? So you can go to 12 employees or 15?
Yes, it makes it easier for you to substantiate it with your lender. A lot of people said, I might bring in that 10, but as things start picking up, I might end up at 15. Is that a problem? Absolutely no. You may have to, remember, you're going to get 2.5 months of payroll to cover 8 weeks of payroll. And Faith and I had this very interesting conversation beforehand. We're actually the government's allowing you more money than you probably actually need. So that's actually allowing you maybe to bring more people back than the number that you had to equate to from last year's average. Okay, David? So forgiveness calculation, again, you have to have the same number of employees as last year if you're using last year as your sample product. And they have to be there for the entire 8 weeks. And they have to be, and your payroll portion cannot exceed 75% of the total loan amount.
Cannot be less than 75%.
And again, but as Faith has said, you don't have to use the entire loan during the 8-week period. Again, you're getting 10 weeks of payroll to cover 8 weeks of payroll. You're getting 10 weeks of funding to cover 8 weeks of payroll. Next slide. Now there's a few more important things you have to know. If you have any 1099 contractors, don't call them employees. Every time somebody asks me, I have some 1099 employees, I get like like the chills and maybe coronavirus at the same time. I'm not sure. And that's editorializing. Sorry, I'm already losing my voice. So 1099 employees, no, I'm good. 1099 employees aren't employees, they're contractors. So they can apply on their own. So if you do have some 1099 contractors and you can't use them in your payroll calculation, you can advise them, go and approach your bank, and they can get the average PPP loan for a contractor is about $30,000. So, and $30,000 over 8 weeks could be very helpful for somebody who's not making any money. The other thing that's really important that Congress did is if you do get this forgiven, which we hope you do, it's a non-taxable event. Normally, forgiven debt in any kind of corporate environment is a taxable event. In this case, the law reads specifically, any forgiven debt for PPP or EIDL for that matter, if you roll it in, is a forgivable debt that's not taxable. So that's very, very good. Again, you can include mortgage interest, rent, utilities. Again, as long as it's less than 25% of the total loan amount, it's forgivable. You can't count any salaries over 100,000. You have to scale them back to 100,000. If you already applied for EIDL and you've been approved and been funded, depending on what the amount is, and depending on that 25% portion, you could basically roll it into your PPP loan and have it forgiven. If not, you should keep it separate and have the longer amortization, and the interest rate at 3.75%. You can apply for both PPP and EIDL at any time. EIDL ends on 12/31/20. PPP ends on June 30th, 2020. So 1920, that would be sort of backwards. So again, so those two dates are very important. PPP runs out June 30th, EIDL runs out December 31st. Next slide. We have already gone over this. So again, it's easy to know how you'll be forgiven. We can always answer questions on it later. The lender is going to need to have your payroll PPP application. It's a 2483, I think it's called. They're going to have your payroll records and your 941s. If you're an independent contractor applying for PPP, you normally need your 1099 miscellaneous or 1099Ks, I think, or 1099, like Uber and Lyft drivers, which none of you are on here. They have another 1099 form that they can use. And sole proprietors, you're either going to use your Schedule C off your 1040, or you're going to use, if you're doing as a partnership or something else, you could use a 1065. But for most cases, most sole proprietors are using their Schedule Cs. If you don't have such documentation available to you for whatever reason, the lender is supposed to work with you to get qualifying information. So, but these are the main documents for the business, for independent contractors and sole proprietors that you're going to need. Next slide, please. Okay, now we're going to talk about EIDL. The economic injury disaster loan has been in place for about 3 weeks now. It's gone through several maturations. It is now very easy to apply for. It takes less than 10 minutes. You go online at sba.gov/disaster. You go for EIDL or EIDL Plus or EIDL Advance. The only difference is the EIDL Advance at the end of the application asks you whether or not you want an advance up to $10,000. And I can explain that a little bit later. The EIDL is basically, because PPP is in place, the EIDL is basically used for operating capital, operating monies to keep the operation going, especially for anything that can't be deferred. It's up to $2 million where PPP is $10 million, EIDL is $2 million. There's interest rate for a small business, 3.75%. For a nonprofit, it's 2.75%. It's up to a 30-year amortization. My understanding, most EIDL loans are getting the 30-year amortization to keep the payments very low. There's no principal and interest payments because this is a loan for the first 12 months. So you're not making your first payment until the 13th month. And eligible recipients must be in business before February 15, 2020. Next slide. Now, what's the big difference between them? EIDL is up to 2 million, PPP is up to 10. There's no forgiveness in EIDL unless you can wrap it into your PPP, which we explained. In PPP, it's forgivable. It's a forgivable funding if you basically can keep the employee numbers up where they are. Now, some people say, well, what if I started with 10 and end up with 8? Am I totally screwed? And no, you're not. If that would be 90% of the target number of employees you were supposed to have, you would get 90% of your PPP funding forgiven. The 10% would roll into a loan and have to pay back in 2 years. The PPP is limited to 2.5 times your monthly payroll average. The EIDL loan, it used to be 6 months of operating capital. We think that's changing. So I'm not sure where it is right now. There may be a cap on it that they're putting in right now. There's a lot of discussions going on. But right now, once you go through the EIDL program, we believe it's up to 6 months of the operating capital that you propose to in your operational application. But again, that's something that's changing as well based on conversations I had today. If you have a loan that results from your PPP funding, you have to repay it in 2 years at 1%. The EIDL loan is up to 30-year repayment, and it's a 3.75% interest, so it is under 4%. There's no collateral requirement or personal guarantee and no advance under PPP. There's no collateral requirement under, I believe it's 500,000 now. That just changed, Faith. And there's no personal guarantee under 500,000. I believe that's changed. But I'm going to look into that a little bit more and update you, and you can get this group some more information later. And the EIDL loan allows for advance up to $10,000. If you get the advance and you get a loan for, say, $250,000, they'll basically fund you for $240,000. They'll take the $10,000 in consideration. If for whatever reason your application is denied and you get up to the $10,000 advance, the funding, the advance is forgiven based on law. So you will not have to pay back whatever advance they gave you. In order to qualify, you have to suffer economic injury. Who hasn't? So that's a no-brainer. And it has to be, it's basically used for operating capital unless there are some businesses that don't want to go for PPP, that rather just get the loan, and they can use the money for payroll then under EIDL, but they can't then duplicate it and go for PPP later. There can't be any duplication between the two. If you use EIDL for operating, use PPP for payroll. If you use EIDL for operating and payroll, you can't go for a PPP loan. Next slide. Again, it's eligible for small businesses, private nonprofits, sole proprietors, independent contractors, tribal, as well as cooperative and employee-owned businesses. Again, you have to be 500 employees or less, unless there's some exceptions for manufacturers. It's got to be a privately owned, not a publicly owned company. And 50% of the ownership has to be U.S. resident or permanent resident alien. We have had several people try to apply that were foreign-owned companies, 100%, and they're not eligible. Next question, next one. Ineligible are consumer marketing co-ops, gaming, if you're more than 33%, casinos, racetracks, unless they're gaming that are a small part of your operation. Any concern that's an illegal activity or anybody involved in lending or investment community. No speculative activities, no pawn shops, no real estate developers, no multi-level marketing companies, any loan packagers, or if you've been in jail. Anybody who's a government-owned entity, a political or lobbying concern, somebody that provides services or live performances of a prurient sexual nature, so no strip clubs. If you've had a change of ownership where basically after the time that was ineligible, and concerns if small begins after impending. Yeah,
basically, if let's say your business was owned previously by a non-resident, you can't change the ownership to a resident and then try to apply.
That's a good one. That's a better way to read it, Faith. And the last one.
And then if your business was established after the February 15 deadline.
Yes. So 2/15/20, you have to be in business. If you started business 2/21, you're not eligible. Next one. Again, EIDL pays for operating capital, financial and operating expenses, which could have been paid if the disaster did not occur. So any fixed debt, payroll, anything that basically takes care of operations that's not a deferred or abated expense. EIDL is not meant to replace lost revenue, lost profits, or or fund the expansion of the company.
Yeah, so if you want to like, you know, repaint your hotel, it's not for that necessarily.
Yes, yes.
So,
You can't, it's not for refinancing any debt or paying down any debt or in any way, shape, or form. So this whole slide is if you're trying to use EIDL to pay down debt at whole, it can be used to make P&I payments toward debt, but it can't be used to pay off debt of any type.
yeah, so
Except, and then a federal debt, it's like IRS obligations, student loan payments. Remember, this is a business debt. This is a business relationship. It's not to help you personally.
so basically, if you have your monthly interest payments that you have to pay on a loan that you already have, you can use it to pay for that. But you can't take the loan and say, wow, I'm going to pay off the principal on this loan and we're going to make our payments 6 months ahead of time or a year ahead of time.
Yes. How do you get the grant? You just apply. You go on sba.gov/disaster. It'll ask you a question. One of the last screens will say, would you like an advance up to $10,000? You say yes. Usually the advance of $10,000 is available for business with 10 or more. We're not really sure if that calculation is standing put based on some recent changes, but that's what we thought. And this is not a grant unless your loan is denied. It only becomes a grant if you submit a loan, it's denied. But if your loan is approved, it is an advance, and it's an advance on whatever amount they approve. Next slide. Again, basically the same thing. Now, one of the things is there's been over 3 million EIDL applications. We originally were supposed to get the advances within 3 days. That's now becoming weeks because they're just going through so many applications. So for all intents and purposes, I get about 25 to 100 emails a day. I haven't heard anything on my EIDL loan. What should I do? There's going to be an 800 number you can call for status. We're trying to figure out a way to get better status because we don't have any access. But again, right now it's taking a couple of weeks to get the EIDL loans, the advances sent out and the approvals completed because again, this is done by the SBA. You must have a credit history acceptable to the SBA. My understanding, the threshold is very, very low. The intent is not to deny anybody for credit. I mean, you have to basically be either dead or never paid a bill in your life to not be eligible for EIDL.
Or you have to currently be in default on federal loans.
Yes, on a federal loan, especially an SBA loan. Yes. Next slide.
We don't have to go through these in detail. I just wanted to show.
Yeah, these are forms that the SBA can ask for. At this point, you're just filling out the application. There is a Form 5 application. You should have it ready in case they ask for it. There's a 4506T, which basically is your tax transcript. If they ask for it, you should have it ready. They may ask for copies of your tax returns. The SBA may just have them ready. A personal financial statement, the same thing, and schedule of liabilities. All these can be available on the website as necessary forms if the SBA requires them. We've been told the SBA is not requiring any additional forms on a regular basis, only if they have a lot of questions about your application. Next slide.
Maybe we can skip that one.
Okay.
Let's, we want to talk about some comparisons between the two to kind of give you an example. So that's what this is about. Like,
Okay. So if you have a motel with 10 employees, and you basically your monthly payroll average is $68,333, you're going to basically be able to, like I said, you're going to take that average times 2.5, and that'll be the EIDL fund, the PPP funds that they'll advance you for payroll. If you're an independent, and that's, I'm not sure why it says PPP or EIDL.
So
I mean,
this is just kind of saying these are different examples of, like, on payroll that can be funded by either PPP or EIDL. But
okay.
if, for instance, you have some 1099 contractors that work for you continuously, like they're doing certain key parts of your business, where you might consider that an operating cost, that might be able to be funded under EIDL, but not under PPP. A mortgage payment, for instance, that can be under either EIDL or PPP. Other types of debt obligations.
Do you want to go run through this list while Joseph can go get some water?
Yeah, let me get
Okay.
some water.
Yeah.
Okay.
Go get some water.
Please lower your voice.
So utilities, for instance, those can be paid for with either EIDL or PPP. But if there's other types of like cost of goods sold that you might have in your business, things like our operating costs. So for instance, maybe you regularly buy a certain number of replacement sheets and towels and toiletries, and there's different types of stuff that you have to buy every month to keep your business going. Cost of goods sold, that can be considered operating costs, like a monthly operating expense, and that could be in the EIDL loan, but it can't be in the PPP loan. So marketing is another thing. If you have a fixed marketing expense that you pay every month. Now, something that's not eligible is something like new equipment. Okay, so if you're doing an expansion or you want to buy, new washing machines and dryers, commercial washing machines and dryers for your business, or you want to refit your kitchen, that's not an eligible thing that you can pay for with this type of money. So what I wanted to show you here is that if you're looking at it, if you're covering all of the different things on this monthly average, your monthly total here is around 125,000. So potentially up to 6 months of kind of your typical monthly operating cost could be around 750,000.
Can you go back, Faith? There were two problems with what you just put out there.
Okay, great.
The second line under the 3 contractors 1099, when you get your EIDL funds, basically you use them as you wish for your business. You can use them to pay 1099 contractors if you wish. You can't apply for 1099 contractors using EIDL funds because 1099 contractors can apply on their own. So you may have obligations that you may want to pay out of those funds, and that's your choice. But in every case, in either PPP or EIDL, the 1099 contractor cannot be used in the calculations. They shouldn't be used in the calculation. You can use the funds to pay whoever you want once you get the money, but they can't be used in the calculation. On the mortgage payment, the next one, under PPP, you can only pay mortgage interest, but under EIDL, you can pay P&I. So under PPP, it's mortgage interest. Under EIDL, it's P&I. So those are just 2 changes I want you to make sure you have clear.
Great. Those are very good clarifications. I will update the slide.
2 questions on that one as well that I know a lot of hotels are going to have would be franchise fees. Would that fall under the EIDL? And what about just general maintenance?
Okay, now understand when you are putting in for EIDL, they're going to ask you one number. They're going to ask you what your gross revenue is. Okay, so say your gross revenue is $4 million. And they have been asking, what is your gross profit margin? So say your gross profit margin is $2 million. They're somehow calculating, and they're not sharing with us. It's that algorithm that we don't know. They're figuring out a number based on that. And say the number is 500,000. So say it's 25% of your net gross profit margin. That's not gospel. It's just a guesstimate. Okay. That 500,000 you get, they base that on a year. They give you, what they've been doing is advancing you 6 months on day 1 and 6 months on month 7, day 1. So that 250,000 we're using for a hypothetical, you use as you choose. You just have to use it for operations. Okay. If you use it for payroll, you have to disclose it. But if you use it for other operation, as long as it's an obligation by the business, that is a legal obligation, you can use the money as you wish. You cannot use it to buy new equipment. You can't use it for leasehold improvements. You can't use it for anything that's a non-operating function. So if you owe marketing money because you're doing something in anticipation of recovery, if you have cost of goods sold that are specific to running the operation, utility payments, advertising payments, all that stuff, though, as long as it is a operating expense, you can use the money for that. But you get it in a lump sum, so you use it as you wish.
Yeah, operating, marketing, and franchise fees are pretty typical in operating expense for these hotels.
And so franchise fee would be an eligible operating expense.
Correct.
Now, your franchise, knowing that you're either shut down or not shut down, should be working with you. I know a lot of franchises are. It's not, it's not given, and a lot of them just want their money. But again, it just depends on where you are operationally. If your ADR went from, from X to Y, and your occupancy went from 90% to 20%, obviously, hopefully your franchise fee is based on percentages, not based on fixed fees, because again, there'll be an accommodation that way for you. But that's how you have to look at it, David. Okay.
So this slide is what he kind of described previously about the 75 and the 25%. This gives you a visual for how that's calculated based on the example that we created earlier.
Right. Exactly. So yeah, so in this case, you got the 228 and the difference being the 57,000 for eligible other expenses. If your EIDL loan is less than 57,000, you could throw your EIDL loan in there if you have one. If you don't, then you could use that for other eligible expenses. Now, say that 57 number was 107,000 that you actually borrowed, then you'd have $50,000 you have to pay back within 24 months at a 1% interest rate.
Yeah,
Okay.
so if it's over that amount.
If it's
So
over
this
that.
is just to kind of give you a little bit of a look at it, whereas the amount you can get under PPP, if it's basically, because it's basically just based in payroll, might be considerably less than you might be eligible for under EIDL. But there's some big differences, right? Because one's forgivable, one's not. The uses for a PPP is more limited than under EIDL, and PPP has a very short repayment period of only 2 years versus EIDL, which is a much longer repayment period.
Mm-hmm. Yep. Good job.
And the other point is that PPP, the application process is with your bank. So there is an application form on the SBA website, which you do fill out, but the process is through your bank versus EIDL is coming through the SBA directly.
Here's a good spot to ask. I've been asked several times about the 8-week period. When it starts,
It starts the day you close your loan.
Is the day you close the loan or you're funded? Because some banks are saying there's time between.
Well, it's the same thing. You close your loan and fund it the same day. Remember, there's no guarantee. There's no title. There's no insurances. There's no nothing. Banks are closing and funding on the same day. So you're right. If you close your loan and they don't fund you for a week, it shouldn't start until the day you get your funding. So, but they're trying to do them simultaneously. And it's 8 weeks. There's no delay. There's no pause. There's nothing. Week 1, day 1 to week 8, day 7, you have to have the number of employees that you agreed to with the lender in order to get 100% forgiveness.
And we spoke about this a little bit before about how there's definitely a lot of people on the internet that are going around and saying, I'll help you pay me $2,000, $3,000 and I'll help you get this money. That's not allowed because both of these loans have very simple, like less than 2-page, basically 2-page applications. So don't fall for that one.
Yep.
Okay, so this is information for where you can reach out to Director Amato. This is his email address at the bottom of this slide. So you can send him any questions that you may have about this. And I think that's it for our presentation. So
I can take some questions. Yeah. We'll go to the chat side.
let me go to the chat and see what questions we've
We
got.
already answered the first 2.
All right. Okay. So what would happen if you work with a big lender and have no luck with your status for weeks on PP for 5 calendar days? As I said earlier, the EIDL loan program was inundated with over 3 million applications. You're going to have some issues with getting response. We thought there'd be like a 72-hour response. I'm hoping it's not 72 weeks. I didn't say that. We're hoping that within the next week that almost everybody who's applied will be contacted and be able to go from there. But it's just a matter of volume. The PPP program, they're supposed to the bank is supposed to get back to you within 5 working days with an approval, and then they have 10 working days after that to close. So that's basically a 2 weeks process. If your business is new as of January 1st, as long as your business existed before February 15, 2020, you basically can apply and just use 1 month of payroll as your PPP guideline. And the same with EIDL. EIDL was under review. Yes, we're hearing that. I would tell you that if you have an EIDL loan in there since the 26th and you didn't reapply yet under EIDL Advance, I would reapply under EIDL Advance. It takes 10 minutes. If you applied under EIDL Advance and you don't hear anything within the next couple of days, I'd reapply again under EIDL Advance.
There was a couple questions that came in before, which I wanted to ask. One was that many hotel owners or managers are paid a fee to manage hotels, but they're paid as 1099.
Not eligible. Can't be used in the calculation.
Someone
Nothing to do
asked,
with
can I
1099.
get both PPP and EIDL?
What's that?
So the next question in the chat is, can they
Yes,
get
yes,
both PPP
absolutely.
and EIDL?
Yes.
Yes, you can, but if you, in that case, you want to make sure you
Don't commingle funds.
you want to separate out so that you're only the PPP is going to the payroll and the other expenses are being paid under EIDL.
Okay, somebody's asking, can you use, listen, the months you use as basis for your payroll, if you started on January 1st, is up to the lender. If you have 2 months of payroll, use 2 months of payroll. The lender is going to make the final determination, but that's not an issue. Anybody who's told you SBA funds will run out, don't know what they're talking about, just plain and simple. And there's a lot of misinformation out there. The only place that you should be going for any kind of information on SBA loan programs is SBA.gov or USTreasury.gov. There's no other entity out there. There's CPAs, there's attorneys, there's all kinds of groups out there. There's chambers of commerce. They're giving information that is not the most recent information, or it's not factual. And you just have to go to SBA.gov or Treasury.gov to basically get the best information. I'm an independent contractor to get my earnings until, well, if you didn't get paid at all in 2019, you're out of luck, because that's what I'm reading here. If you're an independent contractor and you received any income in 2019, you should use that as basis. Remember, it's a monthly average. It's not supposed to be a windfall. And again, it's supposed to last for 8 weeks. So again, use the income you have for 2019. If you have an issue, remember, your lender will work with you, and you could possibly use 2018 numbers to make your case. It really depends on the lender. What about 10 employee to 10 employee? You're the owner of the business. You do what you want with your employees. You got to just make sure that they stay employed. They're asking, what if I reduce hours? I have businesses that are getting PPP that aren't going to have employees come to work for the first 3 weeks. It's up to you. The whole idea of the PPP program is to get people off unemployment. And the federal government is just putting the money in a different bucket for you to pay those employees. So again, it's up to you how you pay your employees. But remember, if you have 10 employees, you want to have 10 employees at the end of the 8 weeks, or you don't get 100% forgiveness. So my bank has calculated 2.5 times payroll as PP. Do I need to use the entire 75% of loan in 8 weeks after closing? I think we've answered that several times. You use the 8 week, you use the payroll portion as the business owner as you wish. You need to keep those employees intact so you get full forgiveness. I don't care if you have, to answer the next question, I don't care if you have 1 employee or 499 employees. You can apply for PPP very easily, even with 1 employee. An independent contractor can basically apply, and they just have to keep themselves employed for 8 weeks in order to get 100% forgiveness. I mean, it's pretty simple.
You just count yourself as the employee.
You just count yourself.
Did I hear you mention there may be an 800 number soon to check status?
When you basically sign on to SBA.gov/disaster, they will, and you apply for the loan, it does tell you of an 800 number for servicing and providing information. Okay, my big didn't allow us to add anything above the 2.5. Well, if your bank didn't allow you to add anything and you have something to add, and you check it off in your application that you want to include something else, then they're basically, you basically have to go back to them and said, listen, I've marked off, I want to take care of other operating expenses, they should allow you. If they don't, you basically, they're not doing the proper thing. They should do that.
Yeah, so they should allow you up to 25% above the 2.5 times payroll to pay for the certain limited number of items
Right.
we showed on the previous slide.
It's allowable. They should allow you to do it. For whatever reason, they won't allow you to do it. You can either tell them that, according to your application, you're asking for it. If they still won't allow you to do it, go to another bank. And if it's one of the big banks, I have no comment. Faith understands that one.
Uh-huh.
How many days after we reapply for idle advance? If you haven't gotten an answer in a couple of weeks, I'd go ahead and reply. For 100% forgiveness, do we have to keep the employee count in the same hours they used to work? You're the business owner. I'm not going to tell you how to run your business. Just keep the same amount of employees as you and the lenders agree to when you file the application and they approve you. If it's 10 employees, keep your 10 employees. How you pay your employees, basically, if you give them half salary or half their wages, they may not stay on. You're going to be stuck with the debt. So you have to make decisions as a business owner. I don't run your business. When do we expect to hear about how I will never know. I don't think we'll ever know how the EIDL calculation is done. You just basically have to accept what they offer you. If your bank isn't taking any more applications, go on SBA.gov/paycheck protection/find. Or if you go on the website, SBA.gov/disaster, and you look for payment protection, one of the first screens come up is, do you need to find a lender? You put in your zip code and it'll find you another lender. Being an owner manager, can I be compensated? If you were not in a paid employee, W-2 employee before, no. If you were a paid employee, W-2 compensation, and you're part of the payroll calculation, yes. If we already funded on PPP.
So we did not actually go through the application, the PPP application. I don't know if you want to do that, or I mean, I
don't have the time. I have another webinar to go on at 5:30. So.
Okay. Well, then we can provide that for them.
Let me make a quick statement too and see if this is correct. If you're afraid that you're not going to spend enough of your PPP against your calculations going forward, hire more employees, pay your employees more, whatever it takes because it's forgiven, right?
Right, exactly. Yeah, for all intents and purposes, you're right. Yeah, you're the owner. You have the pot of money. You want to keep those employee counts equal to the employee counts that you agreed to with the lender. Do what you can. Do what you have to do. And believe me, there are people that are paying employees to keep that account up that aren't working, like restaurants here in Vegas on the Strip that can't open because the resorts are closed to May 1st. So they're closed. They're getting PPP funding, mid-April. The first 2 weeks, their employees are sitting at home, plain and simple. But they're getting paid. They're getting paid, and you're keeping up your census number in order to get 100% forgiveness. If you've already funded on PPP with only 2.5 times payroll, can you reapply? Yes, you can go back to the lender and say, listen, I want the other 25%. They have to honor that based on the CFR, based on the law. Any last questions? 1 or 2 more questions?
Someone asked, being an owner manager, can I be compensated as an employee?
I just answered that, Faith. Okay. If they're not a W-2 employee in the historical basis, they can't be included. If they were a W-2 employee, absolutely they can pay themselves.
All right.
Anyone want to take themselves off mute and ask directly? I can take 2 more questions. If you allow that, Faith.
Oh, please. Yes.
If there is a direct question that you think of after the fact, I gave Faith put my joseph.amato@sba.gov. Call me. I'm answering close to 500 emails a day. I'm usually about a day behind, so I try to get to you as quickly as possible. If you are an IC, if you
independent contractor.
Yeah, I mean, independent contractors can apply for PPP or EIDL on their own. You're an employee of one. They're going to use your 1099 miscellaneous or your Schedule E or Schedule C to substantiate your annual income divided by 12 and they're going to give you that type of money. Like I said, the average independent contractor is getting about $30,000. Yes, the last one that Teet just answered, 75% used for payroll, 25 for operating. Yes, it's 100% forgiven.
And but that is for we had a slide that shows you it's not all operating expenses. There's a select number of things you can pay with that 25%.
Yes. And the bank has to be
Check
aware
that
of what
slide when you rewatch this video.
Yeah. Okay, I think that's it. No one else? Going, gone. Faith, thank you so much for this opportunity, to basically share this information. We're available. We're going to try to make this thing, as simple as possible. But remember, we have not tens of thousands of applicants. There are going to be millions of applicants for all these programs. Luckily, with the lenders, some lenders are already collecting 20, 30, 40,000 applications already. So it's really, really important that you be patient, that you run your business, smartly. Run it in a way that this is a forgivable debt. And let's hope and pray that within 8 weeks of closing, that recovery has started, that businesses are going to start taking that big step forward. Now, one thing that nobody asked, but has asked to me a lot by other individuals, what happens after the 8 weeks that you're still not fully operational, you still don't have full revenue? What are you supposed to do with those employees? Again, you're a business owner. You're going to have to make a business decision. I have no idea if they're going to extend the program out. Doubt it, because it's costing a lot of money that us as taxpayers have to pay. But after ending 8 weeks that you're not, and you've gone through the whole process with the lender and you're forgiven, you may have to lay off those people again. I hope and pray that is not the case. I'm hoping within the next 4 or 5 weeks, recovery begins, and you've got a good 3-4 weeks of payroll being taken care of and being fully forgiven while you're ramping up again. So we're hoping that's what the case is. We shall see.
If you already laid them off, say last month, you can rehire them back before you get the funding.
Yes, you have to rehire. You have to basically work it in tandem with them, that the minute you hire them back, the day you're funded, the day you close and funded, that they're reporting to the unemployment office that they're now working again. And they'll get paid up to that day, the day before, but you got to get them to the whole idea of this program is to get people off unemployment.
Thank you so much, Joseph. This was terrific. We really appreciate you coming on and answering all these questions and giving us clarity. You're a superstar.
No, good luck to everybody out there. I know the hospitality industry very well. It's a tough one. But, just hang in there. This will all come back soon. Thanks, guys.
Yes,
thanks for the opportunity.
Yes, this is being recorded. So I'm going to allow Dave to share the recording with you. So you'll be able to rewatch it if you missed something.